Yeah, it's been a disappointing bet on the small cap stocks. They'd run and they'd pull back. They'd get to a point of resistance and then they would pull back. And they really do. We really do need to feel that interest rates are not going to keep marching higher. That definitely is not their friend because half of their debt is priced on a variable rate basis. So they have. So it's just it's a wind in their face if it continues to go up. But we just don't think that that is going to happen. The small caps, as well as the banks, which we'll be reporting here soon, are among the very biggest beneficiaries of regulation cuts, and so they're actually quite bullish. In fact, small business optimism index spiked. It actually surged, I believe, in November at the highest maybe on record, though from a low rate. That's good news, not just for the small companies, but for a view of onto the consumer as well. And you also made the point. I think you made the point there. 5% on the 10-year or a yield curve slope the way that would not be historically unusual. What was unusual was what seemed like forever at 2% on the 10-year. That was not natural, and that's what a lot of people are remembering now.
Scott Bessent, let's talk about him because, it's not just CPI that drops tonight. I think he appears before the Senate to start confirmation hearings as well. So that's something we're watching, although consensus is most folks think it's going to be pretty smooth sailing, right? His plan, the whole 3-3-3 thing, 3% growth, 3% deficit as a percentage of GDP, 3 million extra barrels of oil. I want to focus on that 3% deficit of GDP. How is he going to do that? Because it doesn't seem consistent with what Trump actually wants to do, whether it's tax cuts, deregulation, or anything else.
Yeah, 333. I mean, Godspeed with that. That's it's catchy. It's catchy, and I think you bring up the one that might be the most difficult one because our deficits have been so very high, and if you don't allow tax cuts to start to eat into that, that's not going to be a help. It's just a difficult mathematics, and you could come up with whatever you want, but if you use dynamic scoring and you say this Trump agenda is very pro-growth, and pro-growth means unemployment stays low, means companies make more money, means revenues going into the coffers there, and that is good news in terms of the deficit. And if the inflation rate continues to come down apace, and we still have at Federated Hermes that CPI level coming down more towards the 2.5% rate target rate by this year end. If indeed that were to happen, then that might help us a little bit on our interest cost situation. So growth is a very good thing if we can get the growth going. And honestly, our economy has been slowing, if not as slow as other parts of the world. It has been slowing, and if he can get that going, he could get his 3%.